Hello everyone and welcome back. In this video, we're going to be learning about Forex chart patterns, okay? We're going to be learning about chart patterns and how to use them in our technical analysis. So I've created this PowerPoint presentation and we're going to go through what chart patterns are as a whole and then look at each and every one of them. Probably not all of them, but the most important ones for you to know, okay? And of course, all these PowerPoint files will be made available to you so you can actually go through them on your own. So what are chart patterns? A chart pattern is a shape within a price chart created by past price movements that helps traders predict future price directions based on how such patterns played out in the past. Okay, so these are what chart patterns are. They are basically patterns created by price action. So when price plays out on our charts, they create patterns, and these patterns have been studied over time, over decades. People have studied these patterns and then observed how they play out. Okay, so that's why they are being used in present day to predict the direction of the market because they've played out over and over and over again in the past. Okay, so that's what chart patterns are. Okay, and then a chart pattern is formed when a trend fails. Okay, so when there is a trend, I spoke about trends and I said a trend has higher highs and higher lows. That's for an uptrend, and lower highs and lower lows for a downtrend. So when this trend fails, okay, when there's a break in structure, when this trend fails, it tends to create a chart pattern. Okay, so that's one other thing you have to know about chart patterns. Of course, we're going to look at them on the charts when we go to TradingView or our MT4 platform. We're going to look at some of these chart patterns, how they play out practically. Okay, so that's one thing we're going to look at. And then for the third point here, chart patterns are an integral part of technical analysis and must not be ignored. Chart patterns are very important for technical analysis. They are a basic part of technical analysis, especially those who want to trade based on price action. Okay, price action traders. Chart patterns are very important. Okay, so that's one other thing you have to know. And then chart patterns fall into three main categories. We have the continuation chart patterns, we have the reversal chart patterns, and we have the bilateral chart patterns. The continuation chart patterns are chart patterns that happen and then they tell us or they give us an idea that the market or the trend is going to continue after they happen. Okay, so these chart patterns tell us that the trend of the market is actually going to continue after them, while reversal chart patterns tell us that there is a possible reversal after they occur. Okay, so there is a possible reversal in the direction of the trend after they occur, while bilateral chart patterns are those chart patterns that when they occur, the market can move in either directions. So the market can either continue in the previous direction or the market could reverse. Okay, so that's what bilateral chart patterns are. We're going to look at all of them later in this video. And then we also have that chart patterns are not an ultimate indication that price will move in the predicted direction. So they must be traded carefully and in agreement with other direction confirmation. So in the Forex trading, nothing is 100%, nothing is totally sure. Okay, let me put it that way. Nothing is 100%. So you have to use chart patterns in agreement with other forms of technical analysis. Okay, so you don't just see a double top, for example, or a double bottom, and then just enter a trade based on just that price pattern. Okay, you have to have other forms of confirmation in order to have higher win rates. In Forex trading, there is no strategy that gives you a 100% win rate, or there is no strategy that is 100%. Therefore, you have to use your chart patterns or whatever you're going to be using for analysis. You have to use them in agreement with some other forms of technical analysis so as to enter more profitable trades or more high probability trades. Okay, so that's one thing you have to know about chart patterns. Okay, so some chart patterns we will be learning about are the double stroke triple tops and bottoms. So this is the first type of chart patterns we'll be looking at. Okay, we'll be looking at double tops and double bottoms, and triple tops and triple bottoms. Then we'll be looking at heads and shoulders, stroke inverted heads and shoulders. Okay, and then we'll be looking at symmetrical triangles. These are all chart patterns. We also will be looking at ascending and descending triangles. Okay, ascending and descending triangles. And then we'll be looking at rising and falling wedges. Rising and falling wedges. And finally, we'll be looking at ascending, descending, and horizontal channels. Ascending, descending, and horizontal channels. So these are the 6 categories of chart patterns we'll be looking at in this course. Okay, so that's what we'll be looking at in subsequent videos, and hope to see you there. Bye.